Hi, hello, and welcome to today's episode of Stock Spotlight. Higgo and Paul will discuss some fan favorites such as Santova, Renergen, Calgro, Pick and Pay, and then last but not least, electronic cars. Enjoy!
4, 3, 2, 1. Thank you, Ingrid, and welcome everyone. So let's get into the first company of the day, Renergen. This is just a quick company update. Obviously, Renergen has been on Twitter and the news, just everywhere because it's this exciting company. You don't get a lot of them in South Africa with these massive promises, and now they have to deliver on the promises. So they just issued an update that their environmental authorization was received for their phase 2 gas project. They saw an 88% increase in LNG production compared to the previous quarter, and also a successful repair of the helium cold box that had some damage. So, just a basic update, and 88% increase in LNG sounds good on the face of it, but it's from a low base, and the market is just losing their patience, because the thing about a company like Renergen is it's very early. You have to sell the dream, and that's why the investors bought in the past, let's call it 3 years, and now the market is losing patience. First of all, we are in a high interest rate environment, high inflation, economic conditions are not the best. So at the moment, the most preferred companies are profitable companies that are generating cash flows, and Renergen is not one of them. It's an exciting company, and they're not really growing into that excitement that was created. There's been a few delays, just a few things happening. So the market is losing patience, and the share price is getting hammered. It's always been a risky asset, and it's always been, if you invest in this, you need to have a long-term point of view. The future is too uncertain to give a prediction. So let us know in the comments, do you think Renergen is going to make it over the long term, or do you think this was just a retail investment hype kind of company? Let us know what you think in the comments. Now, getting into the retailers, Pick and Pay, and we're going to compare them to ShopRite. So Pick and Pay announced that their CEO, Peter Boone, if that is how you pronounce it, will step down as CEO of Pick and Pay effective immediately. Usually when something is effective immediately, it's serious. He will be replaced by Sean Summers, who ran the group as MD and CEO for 11 years. So maybe you can turn around the ship. Pick and Pay SA grew their sales by only 0.3%, even with inflation adjustments. Boxer SA grew by 16%, so that's a positive segment. Their group turnover grew by 5.4%, also quite low. And their loss per share, this is the interesting part, their loss per share, they actually made a loss, is expected to be between 79 cents and 98 cents compared to the previous period where it was actually profitable. The thing about Pick and Pay is they are being dominated by ShopRite. So obviously, you've got the economic conditions, which is bad, and load shedding costs, and the consumer struggling, and all of that. But ShopRite is dominating. If you just look at everywhere you go, you see there are 66 Checkers delivery vehicles, and the marketing team, and with the Rugby World Cup, they're just dominating and taking market share and expanding. We actually have a graph over here that you can look at where we compare Woolworths, Pick and Pay, and ShopRite, looking at the 1-year revenue, net income, average revenue, operating margin. You can just pause here, scan through that for a moment. And that is what was in our newsletter that we posted recently. So if you are not subscribed to our newsletter, the link is in the description, where once a week we share educational and insightful nuggets with you. So make sure you subscribe. Paul, what is your take on Pick and Pay and how they, will they be able to capture some market share back from ShopRite?
Higgo, I think you're on the money this morning. I completely agree with you. Pick and Pay has been completely dominated by ShopRite. I haven't been bullish on Pick and Pay over the last few years. I'm not bullish now. And it feels like a little bit self-inflicted as well. If you think about the history of Pick and Pay, they've often paid out dividends, which is nice for shareholders, but they haven't reinvested into the company. There's nothing new going on. There's nothing special going on. Also, we've chatted about the centralized distribution center that ShopRite introduced way back when. If you drive on the R300, there's a massive distribution center. And how it worked, basically, the old model was that all the suppliers would go to either Pick and Pay and ShopRite directly. So now you have all of these trucks going to all of these different franchises and branches. And then ShopRite changed the game. They said we're going to have a centralized distribution center. So everyone is coming to this massive ShopRite factory. And from there, the ShopRite trucks will go to the individual branches. Of course, in the retail space, margins are very, very tight. So if you can win a cent or two here, or win a cent or two there, it will make a massive difference on the bottom line. And Pick n Pay was very late to that party. Yes, they also have it now, but they only started way later. And then the last thing, when I go into a Pick n Pay, it almost feels like a relationship that I'm just not in love anymore. You know, there's no vibe in the Pick n Pay. Yeah, I go there, I do my shopping, I go home. Checkers, ShopRite, Woolies, there's almost like a moat, but just being in the branch, like in the shop, it just feels good. I feel good. Pick n Pay, I don't feel that. So I don't see it turning around for Pick n Pay. Yes, they had the old CEO is coming back, but yeah, I don't think this is going anywhere. I'm not investing my money.
Yeah, for me, as a conclusion in the retail space, I'm not a massive fan of the retail sector in South Africa at the moment, just because of the economic conditions and all the uncertainties. But if I had to pick one, and I'm considering starting to nibble and dollar cost average or rand cost average, and that it would be for ShopRite. That is my pick. But it's going to be interesting time for the retailers. The next company is my largest holding, and there's no news about it, but I thought it's maybe just time for a quick update on it, and that is
drum roll, please.
Santova. So earlier this year, after their great annual results, where they surprised the market because a few reasons we'll get into now, but their peak was at R9.60 a share. Okay, well, R9.80 it was quite high. As usual, nothing goes up in a linear line, so the share price had a pullback and it was hovering around R8.80, and now the share price is actually at around R8 and some volatility going on there. That puts it on a PE ratio of 5. Okay, this is a company that's been delivering year over year over year. We are expecting a trading statement from them in October, latest 30 October. And I think the market is potentially expecting not the best results because of the lower shipping rates. So they're obviously a freight forwarder and a supply chain solutions and all of that. But to some extent, not really in Africa, but in Europe and some of those areas, the higher the shipping rates, the more revenue they make. Okay, so it's been really high since COVID happened, the shipping rates, and therefore they made lots of money and it was easier for them to make money. What's going to be interesting to see is now that the shipping rates, while they were low pre-COVID levels, how did they manage to adapt, and were they still able to generate the cash flows and the profits and the revenue that they have been the past 2 years since the high shipping rates happened? Personally, for me, I'm not worried. Look, these things happen. Sometimes you get higher cycles, lower cycles. For me, I'm backing Santova for a long-term play. I back their management. They are quite conservative. They'll never really say, well, they don't really sell a dream. And they've been executing year over year. So it's going to be very interesting to watch the latest results. And we'll definitely do a video on that. So let us know what you think of Santova and whether the lower shipping rates will have an impact on them. Personally, I bought a little bit more. Paul, any extra insights from your side?
No, you do your thing with Santova. You know, I'm a Caxton man. Recently, I've only bought Caxton and Bitcoin, actually, but that's a conversation for another day. But this is where I'm dollar cost averaging into. Maybe another video, maybe next week.
Next company is called Calgro. They had a few difficult years behind them, but this year has been anything but difficult for them. The share price was up 20% the last month, 87% up the last 6 months, and that is because of a few reasons. So first of all, their results. Their earnings per share is expected to grow between 28 and 48%. So really well done to them. They've been doing a lot of stock buybacks. And you know, those who've been following this channel for a while, I love when companies do stock buybacks when it makes sense, when it's undervalued, where there's no really better other opportunities. Yeah, like well done to Calgro. Any comments on Calgro, Paul?
Oh, Calgro, it's an interesting company. It's a micro cap on the JSE, about 600 million in market cap, so under $1 billion. And there were actually quite a few eyes on this one. I think Josh Will, you did a stock pick way back when. And also it was actually originally introduced to me by a community member, Letitia Jansen van Vieren. So thank you for highlighting that one to me. Unfortunately, I didn't nibble. I didn't make some money on this one, but I know she did, and quite a few people did, and they made a lot of money. Brilliant results from Calgro. They are basically a budget version of Baldwin. It's like they build residential estate, but they target the lower LSM groups or low income earners, like 400,000 rand for like a townhouse, those kind of properties. And it's all across SA, but mostly in Gauteng and the Western Cape actually. Earnings per share, great. They did stock buyback, so they're doing the right things. And they sold many units, had a great year. They also own like private cemeteries and memorial parks, like Durbanville, where I stay. There's a Durbanville memorial park, which they actually own. So yeah, let's see where this one goes. It's still early days, so of course you're taking risk if you invest in such a company, especially one that had a brilliant year. So with brilliant years, you often see a pullback afterwards, but it's still so small that you can actually make some money on this one. So will I start nibbling? Not actually sure, but it definitely got my attention. So yeah, let's dive deeper into this one in a future video.
Now for something a bit more exciting once again. Electric vehicles. So one of my dream cars in the future, or I'd just like to have one of them in the future, is a Tesla. So out of these four that I'm going to mention now, Tesla is by far the biggest. So bear that in mind. It's much easier to grow 1,000% year over year if you're small. So Tesla is doing it from a larger base. So in Q3, they represented a 25% increase year over year in deliveries. NIO delivered a 43.8% year over year increase. Li Auto represented a 212% year-over-year increase, and Xpeng, if I pronounce that correctly, increased by 81%. So overall, it's quite interesting to see how the electric vehicles and the deliveries and sales are really increasing. There's new competition, even the traditional automakers getting into the space. It's very interesting for me. For me, the pick, if I have to invest in electric vehicles, those who've been following FinMeUp since 2019 will know that in 2019 and 2020 and even 2021, Tesla was my biggest holding. It's not anymore. I don't even own Tesla anymore. But if I had to pick an electric vehicle, it would be Tesla. Just because it's not just electric vehicles. They've also got the autonomous vehicles. They've got the, what are those robots called? That look like iRobot. It's much more than that. And obviously it's Elon Musk running it. It is quite expensive still, but it's interesting to see how these electric vehicle companies are growing, and it makes me really look deeper into an ETF called the lithium and battery ETF, because obviously these vehicles need those lithium batteries and that kind of technology. So very interesting to watch the space. Will be interesting to see how the General Motors and the series and all of those companies get into the space as well, and how they compare to Tesla. Paul, any final comments from your side?
Now, once again, slap bang, I agree with you. You go electric vehicles and AI, they're coming for you, and there's nothing you can do to stop it. And it actually excites me. Electric vehicles, what an exciting venture. We're all trying to move this ourselves, but also the planet forward. And electric vehicles is a step in the right direction. But now it's all about competition. The one narrative is competition between all of these new companies, and then also how the traditional auto manufacturers fit into this thing. Will Toyota, Ford, will they be able to adapt or die against these new kids on the block? I think they will obviously, or I believe that they will adapt, but time will tell.
Time will tell. Thank you for watching. Once again, we are here every Friday for this stock spotlight, so make sure you are subscribed, and if you found some insights, consider liking. And finally, if you want to book a call with our Wealth Wingman right over here, Paul, and chat about bonds, diversification, finances, whatever you want, it is free. The link is in the description. Hope you have a great day. Cheers. 4, 3, 2, 1.
Insightful. Thank you so much, Jess. Then for our community who reside in Stellenbosch and surroundings, please do come say hello at next week's Woolworths. We'll be there with some puppies and some other exciting features that we will be launching soon. See you there. Bye.